flushing again. The level I'm watching for short-term bias. So right now you're at resistance, but honestly, resistance can be broken. That's a possibility. But one of the things you have to recognize here is this longer-term trend line, which I just discussed with my live traders in office here just 10 minutes ago before I started this broadcast, is that this is a long-term trend, right? You hammered on it here, you hammered on it right here, you broke above it, now you hammered on the opposite side. If we break below 28,500, 400 area and we confirm using the confirmation signal, that gives us now a downward channel or a break of the trend. So for me, you're now, and by the way, these two lines are going to meet. So this is going to happen over the next week or two at longest.
All right, so he's saying that if we break below 28,500, he thinks Bitcoin may be in trouble. Let's actually see where we're at, because I know we're actually way below 28,500. So right now we are at 27,458. I wonder what Gareth's going to say now. I wonder how far this dip's going to go. And so that's why I've got our man in the house with us. Gareth, welcome back, buddy.
Hey, Rand. Thanks for having me back.
Cool. I'm going to bring you on in a second. So we do have Gareth here, and we are going to talk about that. We also got a big show today. I'm going to show you where the money is flowing to, because what you're getting is you're getting these altcoin pumps, but the pumps are very short-lived, and then they're coming down. I'm going to show you why that's happening. Also, I'm going to talk to you about some big macro events that may happen this week that actually may have a big impact on Bitcoin's price. So listen, I'm traveling, but I'm here bringing you the highest alpha per minute show on the interwebs. Let's do this.
Get the fuck out of bed, bitch, go. Get up, again, they got go. Time to wake up, bitch, get up. Get up, get up.
Hold on, let me get this straight. You're saying, run, he's our man. If he can't do it, Gareth can. I actually believe you, but the true test will come in our trading competition. The true test will come in the trading competition, because we've got Gareth's community, we've got our community trading, not against with one another. We've got each other trading with one another. If you haven't yet into the competition, go into, there's a link below. You got to sign up with either our referral link or Gareth's referral link if you want to win the prizes. Prizes are a Tesla, a Rolex watch, and $10,000 in cash. Also, we're going to be giving away a whole lot of random prizes, and I'm going to be funding a whole lot of accounts. So listen. We've got a big show today. I've got Gareth here, and I've got Gareth here for limited time. So listen, just quickly, you know the formalities. If you are new to our channel, subscribe immediately. Join the most loyal community in the world. And we'll talk about some of the stuff we're doing with our community in the next month or two. It's going to be absolutely amazing. Then, if you are already a subscriber, like this, obliterate the like button, and keep giving us love in the comments. That's all we ask. All right, listen, I'm not gonna stall us any longer. Got the man of the moment here now. Gareth, how are you, my friend?
I'm really well. Thank you so much, Rand.
Man, you've been busy. I've been watching your tweets, and you've had people trading on your awesome trading floor. I must say, it's looking unbelievable, right?
Yeah, thank you so much. Yeah, it's been a wild last week or so.
Yeah. Okay. Speaking of wild last week, so you actually, I'm actually going to play it. So I just want to get the timestamp. So just give me 1 second, because I want to rewind here, and I want to go back to about here on my video, and I want people to hear what you said, because it's all very well people calling it after the fact. You actually called this before the fact. So let's quickly play it.
Level is the technical level, 30,500. Look at what we've done right along here on the chart. Bitcoin has hammered on this over and over again. This is the daily chart. We even had a doji right here, which is a bearish signal, where it popped above and then got slammed down right to that level. I love how it flushed 2 days ago, rallied back, and now it's flushing again. The level I'm watching for short-term bias. So right now you're at resistance, but honestly, resistance can be broken. That's a possibility. But one of the things you have to recognize here is this longer-term trend line, which I just discussed with my live traders in office here just 10 minutes ago before I started this broadcast, is that this is a long-term trend, right? You hammered on it here, you hammered on it right here, you broke above it, now you hammered on the opposite side. If we break below 28,500, 400 area and we confirm using the confirmation signal, that gives us now a downward channel or a break of the trend.
Okay, so we didn't break through 20 or through 30,500. We did break straight down below the 28,500 level, which actually corresponded to what I was saying. I was saying, I think there's too much leverage in the market. The numbers were telling me there was too much leverage in the market. It was getting too frothy. I called for a leg down at 30. I called for another leg down at 29. I called for another leg down at 28. Now 27.4, I'm calling for another leg down. All because the leverage is just not being shaken out of this market. There's the leverage chart here. What do you think? Now that we've broken the 28,500, where does it go from here? What channels are you watching? What levels are you watching?
Yeah, so at least on my chart, right? So notice where we've kind of just stalled here. And again, that corresponds with this area, which if you take a trend line kind of right under the consolidation lows here, and we just drag that across, you're kind of just on top of that level. So right now, this 26,800 level, that's your current support up to 27,000, excuse me, 26,800 to 27,000. But I do think that breaks. What you're starting to do here is form a bearish flag consolidation pattern. So bearish flag is sideways chop, which again is kind of eating up the bulls that are buying, but they're not getting a pop out of their buying because sellers are still making that selling price. So essentially what we're looking at is a break of this 26,800, sends us down to 25,000. And 25 will be a monster support. So again, that would be where you would start to potentially flip into a long position on Bitcoin. Now, again, us not breaking above 30,500 and confirming, to me, still tells me that we're still in a bear market. So you just want to be overall careful. But I do expect major support around 25,000.
Okay, wait, go back. You're saying you still think we're in a bear market?
Yeah. Oh, yeah. No doubt. No doubt. I mean,
again,
okay.
What would invalidate that for you? Because, I mean, I'm looking at the markets. The markets look like we're in a bull run. I look at the CAC around. I look at the French stock market is at all-time highs. The NASDAQ, the S&P are very close. I mean, they're 5, 6, 7% away from all-time highs. What would convince you that we actually are in a bull market?
Well, at least for Bitcoin, it's that 30,500 level, right? So if you can get above that and confirm, that was the psychological level here that kind of denoted the 2021 lows, right? Where we had that big dip right down to 30,000-ish, give or take. So again, that would have been a key break point we can see right here. So on a technical basis, that's kind of what I'm looking at. And that's one of the reasons why I expected the market to push us back down on Bitcoin. Now, looking at like the CAC and various other indices, I think number one, you have the US markets that are more likely to be in a bear market that will continue to see selling. You have some issues there in Europe. They're still coming out of some things. But overall, the bottom line is let's keep in mind that the Federal Reserve has said that we're going to have a recession in the second half of the year. Yes, they said mild, but Ran, you remember transitory, right? So they said transitory, and look at what we got. They tell me mild recession. Right away, my mind jumping to probably at least a medium depth recession. And then you have other players like Warren Buffett coming out saying that year over year, one of his retailers' sales were down in the last month 22%. So the consumer is stopping their spending, and that's going to create a recession. So risk assets are wildly mispriced here, and they're going to have to correct sizably. I actually have a downside target this year of 3,300 on the S&P 500, and I also have a downside target for the next year of below 3,000.
But in this case, would a recession not be, I'm not going to say good because a recession can't be good, but would a recession not be A, historical, and B, a reason for the Fed to loosen their interest rate hikes very quickly? Is that not what, if we got a recession and the numbers showed a recession, A, those numbers would be historical, but Powell would also be in a position where you cannot keep interest rates this high after they've gone up so quickly whilst the economy is in a recession. It just doesn't make sense.
Yeah. So a couple things. Number one, a recession in this situation could actually be much, much worse. The main issue with that is that how does the Fed lower interest rates aggressively with inflation still north of 2%, right? I mean, we're still talking 4, 5, 6% inflation. Now, if it gets down sub 3, maybe they have some wiggle room, but we're not at that point yet. So to me, that's a very scary thing. And stocks and crypto have to be very aware that the Fed may be somewhat handcuffed here if we do hit a recession. And then the big question is, if we get into a recession, how do we get out? does the global markets, do they know how to get out of a recession without the Fed printing money? And if the Fed can't print money, do we get in this long-term recession that could be very rough on stocks as well as risk assets like Bitcoin?
All right, take me back to the Bitcoin chart. Maybe if you could show us the 200-week moving average, because I think that your price target, your 25.5 price target, really talks exactly to the 200-week moving average, if I'm not mistaken.
Let me just get it up here. There we go. So you're talking about down here, around 21,000?
I thought it was about 25.5, but you're saying it's much lower.
I mean, right now that's what mine's showing, and again, I have to check what moving average this is. But the bottom line is the 25,000 is just a major pivot point on the chart, right? You had this kind of blip right here. We had the big dip down to this moving average, and then we had the run up where we stalled right there and finally broke up. So that now becomes a big target area of 25,000. But really, if you look down here, I mean, you're talking about getting down to that same moving average as a possibility in the not too distant future. And I do think that, you know, if you look at the froth, and I said this, and you kind of mentioned it, how you were saying about liquidity in the market, how much leverage is in the market. Think about how bullish the global crypto markets have been. It was very reminiscent to me of when you had crypto at 69,000, that bullish bias in the markets, yet we were here at 30,000. To me, that's a negative divergence, and that's something that we have to be very scared about.
Yeah, you know, I must agree with you. So for me, a good measure of how frothy the crypto market is you see the crypto bros sharing their screenshots of the amount of money that they made. You know, those screenshots, plus 800. I said to our community, when I started seeing too many of those, that for me was a sign of too much froth. Gareth, I also listened, in fact, just before we go there, here's the 200-week moving average on Bitcoin. On my chart, the 200-week moving average is about 25,800 right now, which corresponds to your low level, which also, if I take that and I say, okay, let's look at the amount of leverage in the system, let's take one more flash out. I think that here, we're going from 27,500 and we're going, you know, down to 25,800, which exactly corresponds to your level. You weren't that bullish on altcoins. I think the theory that you said is almost like the 𝗕𝗓𝗕𝗏 theory. Who's going to buy the altcoins from you? There's no more liquidity. All the bros are already in the market. They're already all shilling their altcoins. Who's buying the altcoins? Walk me through how you see alts. And I think for me, the proxy for altcoins is the ETH BTC chart.
Yes. Yeah, for sure. Absolutely. So let me go to the ETH BTC chart here. And again, you can see on this chart, there's no doubt about it that, again, we could see that pullback here. But actually, if you just humor me, I want to show you one other chart here. It's the Bitcoin dominance chart. And this actually could be telling us that we could be setting up for a drop in the Bitcoin dominance side of things. And what I'm seeing here is a little head and shoulders pattern emerging. And again, if we look at this, you have a little shoulder here, right? And we have this move down here. Here's your head, and then down to the shoulder. And then we could be making a little bit of a shoulder. So if you break approximately this area right here on the Bitcoin dominance, you could actually see this coming down, Bitcoin's dominance coming down decently, possibly all the way back to this trend line. So what that would mean, it doesn't mean to me that the alts are going to rally. It just means that Bitcoin could actually play catch up to the downside to where the alts were or are.
You know, it's funny because that's my theory. My theory is that Bitcoin's had its run up and the alts have yet to catch up to Bitcoin. But Benjamin Cowen sees it completely different. He's saying he's taking the Bitcoin dominance chart, but he's also taking the ETH BTC chart. And he's looking at the ETH BTC chart, and he says that one's in a downward channel, which is just going to continue. Let me just see. I don't know if you've got it in front of you, but let me just quickly call up the ETH BTC chart here.
Okay.
ETH BTC. Here we go. Yeah, so he's calling a channel down here. I think it's this channel over here. And he's saying that this, you know, if you take ETH BTC and you look at that channel down here, that channel is just going to continue to go down until it actually breaks up above that.
Yep. Yeah, I agree with that. That's generally the correct technical analysis where you have that's technically sideways consolidation or slightly lower consolidation. It could continue sideways to lower, but eventually that should break to the upside.
All right, Gareth, what do you think of earnings this week? It's a massive week for earnings this week. I think I had a visual here. Let me just see if I can find the visual. I think
tomorrow we have Microsoft and Google. Wednesday's Meta, Thursday's Amazon. So there's some major.
Let me give you. So that shows you the amount of earnings that are coming out this week. Visually, that's what's coming out this week. Do we want good earnings or bad earnings? So here's the question that I want to pose. If we get good earnings, Powell has a license to continue to tighten because we're not in a recession. Everyone's got good earnings. If we have bad earnings, we're going into a recession, and then Powell can't continue to tighten anymore. So what do we want? As crypto bros, what do you want? Do you want good earnings or bad earnings? When Alphabet reports, when Microsoft reports, when Amazon reports, when Apple reports, what do you want?
So I think the market wants good earnings here. And the reason the market wants good earnings is that the market realizes with inflation where it is, the Fed only has limited abilities to lower rates. And so if you see earnings falling off a cliff, that's going to mean, we're heading towards a recession. The Fed cannot loosen that quickly. Remember, the Fed is priced to actually hike rates in about 9 days for their next meeting. So again, what are they going to all of a sudden do, a pivot and start dropping rates with inflation still at 5 or 6%? I just don't see it. So if you start to see really a crack in earnings, it could mean not just a mild recession, as the Fed has said, but actually a worse recession, which again, with the Fed's inability to print money and get us out of it because of inflation, that could be really, really bad.
I think what I'm hearing you say is that we want a recession, but we don't want a recession now. We want the recession to come in 5 months or 4 months or 6 months when inflation is back at near 3% levels. I think that's what I'm hearing you say.
That's it. No, that's 100% right. Is if inflation can get back below or right around 2%, that gives the Fed the wiggle room to be able to lower rates and maybe print money in the future. Up here, they can't do it. I mean, just the bottom line is, we could see a bad situation with the economy. What are they going to do? Print money and then send inflation to 25%? I mean, we're going to be the next Venezuela. That's not going to happen. So you do not want a recession in the near term here with inflation this high.
All right, so I'm going to ask you again, as I always ask you, in the next week, you're betting down on Bitcoin.
Yes, I am. I'm still negative on Bitcoin. Absolutely. I am negative on the S&P going into earnings. In fact, one more chart I want to show you guys, if I could pop up my screen here. So this is the monthly chart of the S&P 500, and I'll leave you guys with this thought here. Look at that insane run from COVID, the pullback, and the sideways consolidation. The next chart I'm going to put up here is called the psychology of the market chart, and you're going to see it almost is a perfect replica of what we have seen here. All right. So here it comes right now. If you look at this chart here, what I have up on my screen, if we can pop that up, look at the run up, the pullback, and the sideways consolidation. So this is fitting perfectly with the complacency period after euphoria and the pullback in the S&P 500. What we see on the chart here is the next phase coming is not a pretty phase for the markets. This is where we start to realize that a recession is coming. The Fed can't get us out of bed here. They can't save the day. And again, that's what I'm looking at. It's amazing how those two charts match up almost tick for tick.
So for the community who are trading in our competition, I take it that your advice to them, not financial advice, but how you would be trading this competition is you would say next couple of months, rather be short than be long.
Well, yeah, and remember, as a trading competition, you got to be a swing trader there. So you're going to be basically looking to buy supports, but then shorting resistance. So if we do dip to 25,000, I'm going to be looking to buy, look for a bounce back to 26, 27, and then I'll look to short again once we get back up to the current levels that are consolidation, which are now becoming resistance once we break. So basically, you need to be a trader for the next, 6 to 12 months. Again, make sure it's within the comfort zone of whatever you end up doing. You want to be careful, obviously, but ultimately, you have to be a trader to make good money in this market, or again, be very careful and stay in cash.
Gareth, listen, I know you got to go and do what you do. So listen, sending you much love from the Banter fam. I'll see you on the competition, man. I'll see you at the competition where we're going to give away these amazing prizes.
Sounds good, Rand. Take care, buddy.
Thank you, brother. So Gareth bearish again. He's saying we're going to go down to 25,700 or somewhere around there, which actually does correspond to the levels that I've been talking about for a while, because as you know, I have said to you guys that for as long as we are getting these this leverage, and I'm looking for the leverage not to drop to where it was at the bottom, but I'm kind of looking for the leverage to get to maybe this level here, which is, you can't really see it, but it's about 100. So if we can get to about 100, then I'd say that this leverage shakeout has happened. Now, how I know that I'm safe, or why I differ from Gareth here in Gareth's ETH. Gareth is quite negative unless we get to 30,500. But I'm actually looking at the on-chain data as well. So if we look at the on-chain data and we look at who was it that actually sold into this dip, who were the people that sold into the dip, what you can see is it's very, very, very clear when you look on chain that the people that sold into the dip were actually the short-term holders. So these short-term holders were the same short-term holders that bought their Bitcoin at the top at $30,000. And then as soon as the price started to go down, these short-term holders actually started to sell. And there's a whole lot of charts that actually show you exactly the same thing. You can see that the short-term holders, they were the ones that sold into this dip. Then the question becomes, all right, well, if they were selling into the dip, who's buying into this dip? And what I'm seeing, and again, I'm only looking at the on-chain data. This is not Run's view or anything like that. It's just what the on-chain data is telling me. But the on-chain data is telling me that the people that are accumulating this is the long-term holders. And what you're seeing now is you're seeing that the long-term holders are now at levels that they haven't been at since 2015. The last time that long-term holders made up 73.5% of Bitcoin's total holders, it was in 2015, which then obviously led to a huge rally in 2017. That in fact, the 2017 rally from a aggression point of view was a much bigger rally. You can also see it over here. If you look at this chart over here and you look at who's accumulating, now you've probably seen this chart a million times. What you can see is that if you look at this top line over here, the people that are accumulating the most right now were the same people who were dumping on the way up. They are the same people who are accumulating now. So the whales are actually accumulating now, and it's the small fries that are actually selling now. So what do we know? We know that whales, big whales, are the ones that are accumulating, long-term holders are the ones that are accumulating, and the people that are selling are the people that got caught up in hype, came here, bought at 30,000, were real short-term holders, saw the drop in leverage, and then basically automatically got flashed out. That's, if I look at the data, and again, this is not Run's take on it. This is what the on-chain analysis and the on-chain data is telling us. The other thing is that if you look at who these people are, if you look at the 2015 long-term holders, if you look at the long-term holders know that we go through cycles. And long-term holders know that when we get into these cycles, that these dips are actually quite normal. I showed this to you guys on the weekend. For those who made a weekend stream, I showed you guys this thing on the weekend. But what we know is that the market continues to go up in a bull pattern, but we do have quite aggressive pull downs along the way. The most baby of these pull downs is a 10% or 15% pull down, but they can get quite aggressive, like 31%. If you look at 2019, you've got a 19, a 12, and 11. I showed you guys this on the weekend. So the long-term holders know that because they've been here for a long period of time. And they know that when you get, if you're in the upward cycle and you get these corrections, then providing you believe that the cycle is up, and I think by now most people believe the cycle is up. Gareth doesn't, but a lot of people believe that the cycle's up. We know that, or if we hold this thesis, and I'm going to continue to hold this thesis until Bitcoin breaks this unless Bitcoin breaks this 200-week moving average. If Bitcoin breaks and closes below this 200-week moving average, then I'm going to turn around and say, okay, hold on, maybe my thesis is completely wrong. But until then, I continue to believe that this is one of these pullbacks, which, as you know, I'm a long-term holder. I've been here for a long time. And as a result, I'm going to continue to keep buying these dips. I'm not buying yet, though. I'm waiting much closer to 25,500. I did say to you that there are two ways for the market to flush out the weak hands and the leverage. The first way is with an aggressive blow, like a very hard strike, FTX, Luna. That flushed out leverage very, very quickly. The other way is to break the market with less pressure, but for longer periods of time. And so this time we're clearly seeing a mild drop in the market for longer periods of time. I wish this would have happened down, and then 3 days later we start going up again. This time it's different. What you can see is that this is from James Van Straat, and he says Friday looked like a lot of fear entered the Bitcoin market only on Friday. Almost $240 million worth of Bitcoin was dumped on Friday. After almost 7 consecutive days of coins entering exchanges, selling got progressively more aggressive. So what you're feeling is, it's almost like, like they tightening the screws, and every time they tighten, it gets more and more sore, until eventually these short-term holders and all those people actually drop out. And that's really what we're seeing here. That's what we're seeing here. But we got to be smart. When others are suffering, we got to turn around and say, okay, no, hold on. We are the ones that are actually going to be buying. And I think very soon, I think, to be honest, if Bitcoin goes down one more leg and we start seeing that leverage going down, that's when I'm actually going to start buying. So follow me on Twitter, because I am traveling. Ironically, tomorrow, I'm traveling to the USA. I'm traveling to a country that doesn't want crypto people there. And I'm traveling with a whole lot of other people to go to Consensus, to CoinDesk, to Consensus 2023, to a country that doesn't even want crypto. We're going to like the biggest crypto gathering probably in the world. So yeah. I think also very important for us to note, and I want to just quickly get you a chart here to show you something. Remember that Bitcoin it's actually not even Bitcoin. It's actually all crypto is actually just a function of global liquidity. We've shown this chart many times. We know that the more global liquidity there is, the more the crypto prices have gone up. Now, you'll remember that there was a big spike in global liquidity when the banks were collapsing. Let me try and change colors for those of you who can't see. Let's try and make that white. So there was this big spike over here of global liquidity when the banks were collapsing. But what you can see now is that if you look at the global liquidity is actually starting to come down now. So I dug into this a bit deeper. I wanted to see where it was that the global liquidity was coming down. And it seems like mostly, even in China, in fact, less in China, but in Japan, for example, where we were getting a lot of liquidity, that's starting to come down. The Fed obviously bringing down their liquidity because now the banking crisis is behind us. So that is also why the markets are actually starting to come down, because you're seeing global liquidity actually be squeezed. You should be watching this chart, because if you can spot when there's going to be global liquidity, you will get a big advantage against anyone that's not actually watching the charts. I did see this article by Bloomberg, worth mentioning, that they are now calling for a $50,000 price index on Bitcoin, and they're referring to the halving as the rally for it. I do agree that the halving is the big thing, but I don't agree that 50,000 is the number. I think the number could be even way higher. I also saw this chart, which shows that Bitcoin is actually repeating a 2017 pattern. And if it is repeating a 2017 pattern, then we're going to start going up again. There's probably one more big push up if it is repeating that pattern. Yeah, I mean, it's probably worth looking at. All right, let's see. This week, there's a lot going on, specifically on a macro point of view. When I spoke with Gareth, you heard me talking about earnings season. And we do have earnings seasons, but the question is, what do we actually want from earnings season? Do we want bad earnings? Are we going to sit there and hope that when Apple and Amazon and Microsoft report earnings that we get bad earnings? Because that would mean that the Fed can't keep tightening, because then we're going very close into recession. Or do we want good earnings? Because if we get good earnings, then that means that the economy is in good shape. Let's actually look at the data. But first, let's see what else is happening this week. So there's three things that you need to keep your eyes on. The first thing that you need to keep your eye on is on Friday, because we've got the PCE inflation data. Now remember, the PCE inflation data is the personal consumption expenditure. It is the measure that the Fed look at to decide around inflation. So that when the Fed look at inflation, they don't look at CPI, they look at PCE, right? And the PCE data comes out on Friday. So remember, that is what the PCE data looked like. It is very much on the decline. The last one was 5, 5.4, then 5 again. Now, we're going to wait until Friday to see what happens with this PCE data. It's a super, super, super important read. Don't underestimate how important the CPE data is. And you know why? Because 9 days from today, which is 4 days from Friday, you've got the Fed FOMC meeting, right? So you've got the Fed FOMC meeting happening on the 2nd and 3rd of May over here. And they will then determine what the interest rate increase is going to be. There are two factors at play before the Fed meet. So the first factor that's at play before the Fed meet is obviously the PCE data, which comes out on Friday. But then there's another factor at play, and that is earnings. So I'm sure that the Fed is actually watching earnings. And they're going to take this earnings chart over here, and they're going to say, all right, who is it, which companies are reporting? They're going to look at the companies that are reporting, and they're going to see how well these companies do. Now, we had Coca-Cola perform very well, but I want to know more about what's happening at Amazon and at Microsoft, and specifically Amazon, because that represents consumers' appetite to actually be buying, right? So we want to see what Meta's results are, what Microsoft's, what Amazon's results are. If these results are good, then the Fed continues to hike. But if these results come out and start missing targets, then the Fed may have to start loosening, and basically maybe drop interest rates or maybe put more money into the economy. So super, super, super important to watch earnings. Here's your chart of who's coming out and when. Tomorrow I'm not doing a show because I'm traveling to the US, but tomorrow you got Microsoft and Alphabet. Also Visa. Visa is quite important because it shows you how much people have spent. Wednesday, Meta is the one to watch. And then Thursday, I think to me, the most important this week is Amazon. And then next week, you got Apple. So those are the ones that are actually reporting. All right. Let's talk about something else. Let's talk about this hype that's going on Twitter, because there is a hype going on Twitter around this sell in May and go away. No doubt that you've heard it. Everybody's talking about sell in May and go away because there's an adage, and the adage says that if you sell your stocks or your tokens in May, it's the period before the summer vacation. And what they're saying, the theory behind it is that if you sell, that most fund managers sell in May because they don't want to be bothered by the performance of their portfolios while they're away on summer vacation. And then so what they do is they sell in May. May, June, and July are June, July, and August are very dead months, and then usually the numbers spike after. Now the question is that really, really true? Is sell in May actually a thing? Because everyone's talking about it on Twitter. The truth is that most people that talk about it on Twitter don't have a fucking clue about what sell in May is. And that's what I thought what we should do is we should actually look at sell in May and decide whether it's worth exiting the market and decide whether the markets are actually going to come down in May. The first thing is, as I said to you, most people don't even understand it, because if you're selling in May, why do you care what the performance of the May month is? If you're selling in May, you're actually saying that you think that in June, July, and August, the numbers are going to come down. You don't think that the numbers are going to come down in May. Otherwise, you would have sold in April, right? So when you see this, and when you see people like Mr. Chief saying, quoting sell in May or maybe not, who cares about May? We care about June, July, and August, because if you sold in May, you want to know what happened afterwards. Did you miss out on returns afterwards? And so we did an analysis. First of all, I read this analysis, which said the 3 worst performing days for the stock market in the history of the stock markets have actually come in October. So 2 of which were the 1929 great crash and then the 1987 crash. That happened in October. So that's got nothing to do with sell in May. But we do know that from 1990 to 2022, the S&P returned about 2% from May to October, which is low, while from November to April, 7%. So from the S&P, the numbers are actually quite mixed. And we did a spreadsheet here. And what you can see in the spreadsheet is if you look at, on average, if you look at June, July, August, and September, on average, if you take the averages here, they're not the best months for the stock market. So from the stock market, sell in May and go away might have some substance, but you would have missed the biggest days, like the 1987 crash, the 1929 crash, even the 2001 crash actually came in I think at the end of August. So that's the first thing that we looked at. Then we went and we looked at it from a crypto point of view, and specifically we looked at Bitcoin. And I said, okay, let's look at Bitcoin and decide whether sell in May and go away is actually a thing. So at face value, when you look at the average returns and you look at all the years, you look at January, February, March, April, May, and you go all the way down to December, you can see that actually June, July, and August, and September, June, July, August, and September actually weren't the best months for Bitcoin. So you look at like January average return is 9.74, February is 12, March is 9, April 33, May is 18, but then you get to June, 6, 7.6. September is a terrible month for Bitcoin, minus 4.67. So you start thinking that, hold on a second, there actually may be something in this sell in May and go away. And so I think we actually did more of an analysis. Let me just quickly, here it is. So our head of research, Joe the Irishman, actually went and plotted the charts for us and said, okay, what happened after May? Now this is where it gets tricky, because if you look at this data, you can see 1, 2, 3. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. In the 11 years here, you've got 2 years where it would have been 2, you've got 6 where it would have been bad, and you've got 5 where it would have been good to sell in May and go away. So not much conclusive data there. However, this is where it gets much more interesting. And this is where you have to be smarter than the rest of the market. The problem is that if you look at the months that you could have sold in May and gone away, specifically the highest returns that Bitcoin's ever got in that period were in the May, June, July. So look here, in this one, 2,500%, in this one, 730%, in this one, 626%. Whereas if you would have sold, you would have saved your portfolio from a much lower correction. Now, I mean, obviously the number 76% down is like a much bigger number up. But what I'm trying to say to you is, I think that it's a higher risk actually selling in May and going away, because 3 out of the 5 years that the markets have gone up, they've gone up by huge, huge, huge numbers. And so for me, I think that if you follow the Twitter hype and you follow the sell in May and go away, you could miss out on the biggest returns ever. Even though statistically, there's a very small possibility, 6 out of the 11 years, it probably would have been better for you to sell. That's a 60% chance that it would have been better for you to sell. So yeah, I did have a tissue here somewhere. I guess that's gone. Okay, here it is. All right, 1 second. I've got Colombia and flu, but I'm not in Colombia. I'm definitely not in Colombia. Also, I think also worth probably noticing is just how well we've done in the beginning of this year. And obviously, if you look at other years where we've done this well, so you look at like 2021, we had a very similar year in 2021 to the one that we've had here. And then the next 3 months were actually negative. So I think it also has a lot to do with how did we start the year. So like here, we started the year very good. And so obviously it's natural that we might actually start coming down slightly. Here as well, we started the year very good in 21, but then we went down. So I think, look, net, the data shows that there's no real conclusive evidence that it's worth selling in May and going away, specifically when it comes to crypto. So don't fall for it. And specifically, if you are going to fall for it, don't fall for these people that are measuring May and then saying to you, don't sell in May, because if you're selling in May, you don't really care what May's returns are. You care about June, July, and August. All righty, let's carry on because there's a lot more that we want to talk about. Remember, in June, on the 1st of June, Hong Kong makes crypto trading legal for Hong Kong. And well, it's not actually Hong Kong, because Hong Kong becomes a proxy for the rest of Asia, right? So we remember the news. The news is quite old. In fact, it was in February. It's now happening. Well, the 1st of June, it will happen. And I think when this happens, what we've got to look for is we've got to look for not how many people start to use it, but more important, how do the banks treat crypto? Because if the Hong Kong banks and the Asian banks start to allow crypto on-ramps and off-ramps, that could bring more liquidity into crypto. But if Hong Kong legalizes crypto, but the banks are still wary of the on-ramps and off-ramps, and they keep cutting the on-ramps and off-ramps, then we're going to be in a problem. Then we have ourselves a problem. We have a liquidity problem in crypto. So what you want to keep your eyes on, you want to keep your eyes on how the banks respond to the crypto, them opening the crypto thing. But we also will probably have a pump in the Asian coins and the Chinese coins. So we've made a watch list. I'll publish the watch list on Twitter, but here's a list of all the Asian coins that we're going to be watching very close to that 1st of June timeline. We'll keep watching it. And as I said to you, I do think that while the US is trying to push crypto out, I think that Asia is actually doing the exact opposite. Actually, Asia wants crypto to go. And in fact, today I actually heard that a Korean court, I think I have the article here somewhere, a Korean court actually realized that, came in and said that Luna was actually not a security. And this is in Do Kwon's case. So in Do Kwon's case, the court actually ruled that Luna is not a security. Now, can you imagine what would happen in the US if Luna was ruled by court as not being a security? It would open the gates for everything that 𝗕𝗓𝗕𝗓𝗔𝗥𝗡𝗧 is against. All right, listen, if you haven't smashed the like button, smash it, destroy it, obliterate it. I'm going to show you something amazing now, which I think will protect you guys a hell of a lot. Also, remember, if you haven't entered our ByBit competition into the ByBit competition, only 2,000 people are going to enter. I see 665 of you are in. Competition starts on Wednesday. You've got to have your money in the account by Wednesday. There's a link below. Sign up with any crypto banter link. Use the link below. Get trading. Let's go, 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 go. All right, I want to talk to you about something that happened this weekend, which I think is super important because it can really protect you and it can really help you make a lot of money, and specifically in the altcoin markets. So I tweeted this, and what I said is, looking at the market, I don't see any screaming buys in the market. Have I missed anything? And I think what was going on was I was getting bored. I was bored. I am a degen, like you guys are degens, and I was getting bored, and I was looking to see if there's anything in the market that's actually worth buying. The market hasn't come down for anything to be cheap, and hasn't gone up enough for anything to be like excited about. So we're in this no man's land. And the thing is that when you get to this no man's land, what you're getting is you're getting a whole lot of high dopamine addicts looking to create their own bull markets. Because there's no narrative in the market, what these high dopamine people do is they start looking to create their own bull markets. And so what I realized is that what we are seeing in the market right now is we're seeing a bunch of addicted to dopamine degens looking for their dopamine fix. And actually, since there's no pump, what they're actually starting to do is they're starting to create their own pumps. And they're creating their own pumps in certain narratives. So it's a bunch of, we're all guilty of this, but it's a bunch of degens who are creating pumps in very low liquidity assets because it's very easy to create those pumps. And that gives them the dopamine fix. I don't think they're doing it maliciously because they want to rug people. I just think that they're gamblers, and gamblers will need to gamble no matter where they're at. They're always going to look for somewhere to go gamble. And that's what I said. I said the latest meme coin mania is literally a bunch of degenerate gamblers who have become frustrated waiting for a bull market. And so now what they're doing is they're creating their own bull market using low cap illiquid assets with absolutely no use case. And I said, look, we're actually all a bunch of retard degens. And then I also said, hold on, retard degens, I may actually be onto something. Now, lo and behold, hold on, let me just find this for you, because within 5 minutes, there was a retard degen meme coin created by someone. Here it is. There it is. It actually even pumped, and it went back down. That is how crazy people have become. Now, this is a good thing and a bad thing. So if you're a retard degen, which I know most of you are, it's cool because you can degen. But the bad thing is that the problem is that it's going to go all the way up and it's going to go all the way down, as have most of these meme coins. They've gone all the way up and all the way down. Look today, there's a BY, I don't know if it's frog, meme. These are up 15,000 and 18,000% today because these retard degens are actually creating their own narratives. Now, it is possible that some of these narratives will actually survive, but the reality is that most of them are actually going to die off. So you can see Wojak's already starting to die off. There is a chance that Chad's starting to die off, but maybe can get a second life. Then you've got 𝗕𝗘𝗕. Now I think 𝗕𝗘𝗕, we could just go to 𝗕𝗘𝗕. Let's have a look here. Okay, yeah, so I think 𝗕𝗘𝗕 might actually have done enough to create enough momentum. But what I'm warning you about is, I'm warning you so that you have your eyes open on what the retard degens are doing. They are jumping. It's the same school of people using very illiquid assets and very liquid narratives to pump things. And they're not coordinated pumps and dumps. They're not fraudulent, illegal pumps and dumps that are coordinated. It's just, we're looking for something to do. And as a result, we're just degening into the thing that seems like it has momentum. I mean, BitBoy's also in it. He says, when I closed my eyes, all I could think about was Gary Gensler's bald head. And he went into Gensler, and he's been bragging all weekend that he went into Gensler. So you can see that, oh, Gensler's up again. It was down 50% earlier on today, and now it's down again. Be careful. Remember also that it's not only happening on meme coins. It is happening on the whole market. People are moving from one narrative to another narrative, and they're moving to illiquid narratives. So I'll show you another one which is happening, which actually could be a cool real-life narrative. So look here. If you look at the last 6 months, this is the last couple of months, you can see that there's a lot of red and there's a few green. A lot of red and a few green means that people are being clinical about which narratives they move to, right? Now, I want to show you another narrative. So Chico Crypto made a stream. And he said, this is the #1 crypto narrative of 2023. I'm going all in for these altcoins. And I actually think that in this video, he spoke about a very smart narrative. The narrative is real world tokenization, or tokenization of real world assets. You'll see it on Twitter. The people say it's called RWT, real world tokenization. Now, he believes that this may be the biggest narrative in 2023. But at the same time, if I look at what happened, there is a token that he spoke about in this thing, and you can see that his video came out over here. Let's look at the date. So it came out 2 days ago. So that was April 2021. Look at the chart of NASDAQ. Okay, starts going up as people start buying. Bang, April 2021. If you bought into this illiquid narrative, you're the fool, and now the price starts coming down. Now look, as I said, he may be right. There actually may be a new narrative, which is real world tokenization or real world assets. There have been lots of headlines around this real world tokenization. Real world tokenization is surging as TradFi grows. You've had Citibank coming out. You've had BlackRock coming out. I think there's an article here. The world's largest asset manager is exploring tokenization of stocks. So yes, there is a narrative around tokenization of real world assets. But the reality is that if we are going to have tokenization of real world assets, by definition, that's a security. So by definition, if you tokenize a real world asset, if you tokenize a stock, if you tokenize a bond, if you tokenize real estate, anything that derives its value from something in the real world is automatically deemed a security. Okay, now we all know what Gary Gensler, or how Gary Gensler is dealing with crypto and specifically securities, right? In that environment, do you believe that right now is the best time to buy real world tokenizations? I didn't say 𝗕𝗬𝗕𝗏 is done. I said 𝗕𝗬𝗕 I think is has enough momentum to actually continue, possibly. So look, there is a narrative around these real world tokenization plays. I don't know if I would be putting a lot of money into it, although they have been performing really, really well this year. So we'll make you guys a watch list for you guys to watch. Unless I think we might even have one. Researchers, if you're watching, just drop me a link to one of these. Yeah, let's follow the narrative, but don't rush into it, because real world tokenization has been here since 2017, and up until now, I've seen maybe 5 real world assets tokenized, and no one is buying them. So don't rush in. Some more news. So Celsius, this could be really good news for the market. I'll tell you why. There is a bidding process that has been announced for Celsius. There's an auction process that is happening starting on the 25th, and I think it's a 3-day process. Now, there are good operators in this bidding process who are going to bid for the Celsius book. From that point, once they get the book, or once they sell the Celsius assets to the highest bidder, you're releasing a whole lot of liquidity into crypto, because right now, a lot of people have got a lot of money tied up on Celsius, and that money is not coming into the market. Now, at some point, and I think it's going to happen pretty quickly, this money is actually going to start coming into the market. It says, so there's an auction, in addition to the stalking horde, blah, blah, blah. So we also know that Coinbase is in. We also know that Mike Arrington's in with Project Fahrenheit. He says, Project Fahrenheit just announced, we've become a qualified bidder in the Celsius bankruptcy process. We are working with the name Project Fahrenheit, a short thread on what we're trying to accomplish. He says, we're trying to make people whole. He says, what happened to the stakeholders of Celsius is an absolute tragedy and has affected the entire industry. We want to help put the pieces together. Our bid not structured as a simple asset purchase. We are proposing that the assets be placed into a new company and is run with the sole goal of growing these assets to make stakeholders whole. So he's basically saying, look, we'll take the assets and we'll invest them because we're a great fund, and we'll try and make people whole. At least I think that's what he's saying. I did reach out to him to come and talk to us, but he said, look, because of the sensitivity of the process, he can't actually be talking to us. He can't actually be talking to us again until this whole thing is actually done. I think that is about it. We do have, I think that's about it. Let's just quickly check the research group and see if I've missed anything that is breaking right now. BitBoy's put on a suit and he's going to a hearing, apparently. I wonder what's going to happen there. I wonder if he's going to land up. Let's see. I wonder what's going to happen. Yeah. Okay, I see that nothing's really. Let's quickly look at the altcoins and just make sure we haven't missed anything on the altcoin market. Let's look at the bubbles. Injective down 10%. There is a point at which I start buying Injective. Probably under $6, I start buying Injective again. Arbitrum 135, not low enough for me. Radix, not low enough for me to start buying. You see, the market's in a no man land. It's like it's not in buy territory, it's not in sell territory. It's in a no man land, and so we just have to wait and basically take no action. All right, listen, if you haven't entered the ByBit Trading Competition, enter the ByBit Trading Competition. 665 people have already entered it. We start on Wednesday. You got to have your account funded with $250 on Wednesday. Sheldon believes that those people that were in his school are actually going to beat everybody else. I wonder if that's going to happen. If you were in Sheldon's school, sign up as quickly as you can. If you weren't, also sign up. Let's have some fun. Let's win those Teslas, and we want to give away those prizes. We're giving away 2 Teslas. Remember, we've got the ByBit one, and then we've got the OKX competition, where we're giving away the 7 nights to Maldives. That's happening on the 1st of May. And then for 3 weeks, from the 2nd to 22nd of May, we're giving away another Tesla. So I don't know. I think we're the only channel that's actually giving you guys two chances to win a Tesla. All right. Tomorrow, no show from me because I'm traveling. I'm going to the US, but there will be shows Wednesday, Thursday, Friday, and maybe even on the weekend. What else? Let's see if anybody has any questions. Let's have some fun. I've got a few minutes to kill with you guys. I will be funding accounts. I just don't have. The problem is I don't have the updated. I don't have the updated list of people, so I can't fund. It'll be unfair if I fund accounts now, but I will get it before the next time that I stream. You want to be funded, you got to have $250 into your account. I'll fund your account as well. Someone says, I like the weekend streams. I will do as many as I can. Obviously, I've got family commitments and stuff like that. I do work hard every day. So, just every now and then, it would be good to just take a bit of a break and be with the family. What was the John Oliver video? You want to watch the John Oliver video? Yeah, let me show it to you. I've got it for you. I think that's very good. And I'm quite surprised that it happened, but here it is. Hold on, here it is.
Banks, founded by this guy, Alex Mashinsky. Now, his whole sales pitch, as you can see from his cool T-shirt, was banks are not your friends, which is clearly true. But he really doubled down on that message in ads like this.
Banks are not your friends. We all know that. And we decided to create a replacement for the banking system, right? Something that acts in your best interest, a place where you can actually have your money work for you, not just you work for your money. And basically 3 years since we launched the product, we've paid $1 billion back to the community.
Now, despite the fact that he sounds exactly like 𝗕𝗬𝗕𝗏 in the room, Mashinsky built one of the biggest crypto lenders with more than $12 billion in deposits. And one of the ways that he did this was by promising customers would get up to 18% interest rates on their deposits. That versus the average of 0.06% then being offered by traditional banks. And he'd like to say that banks could actually pay those sorts of rates if they wanted to, adding somebody is lying, either the bank is lying or Celsius is lying. And hey, ¿por qué no los dos? 2 things can be true. Like how Frankie Muniz can be both 37 years old and 12 at the same time, or how The Rock can be one of the highest paid actors in Hollywood despite never actually acting. Mashinsky went out of his way to build trust among customers, holding weekly live stream AMAs, sometimes featuring dumb stunts like when he started one wearing a Mandalorian mask. And on these calls, he would brag about all the great things that his company was doing for people while occasionally engaging in the single worst attempt at a dab I have ever seen.
The beauty of what Celsius managed to do is that we deliver yield, we pay it to the people who would never be able to do it themselves, we take it from the rich, and we beat the index. Okay, that's like going to the Olympics and getting 15 medals in 15 different fields. Okay?
What the fuck was that? A heads-up dab? And to be honest, why a dab at all? It's not 2015, and you're not a guest on Ellen. Also, you're 57 years old. That demonstrates a lack of judgment, frankly terrifying in someone supposedly running a financial institution. And yet Mashinsky insisted we are probably one of the least risky businesses that regulators worldwide have ever seen, which was just flagrantly untrue. A court-appointed examiner later found that he was making incredibly risky loans and was also using customers' money to pay the high yields that he'd promised, which sure sounds like the textbook definition of a Ponzi scheme. Eventually, Celsius started minting its own coin to inflate its balance sheet, a coin that its own employees said was worthless and that its price should be zero. One even said that the whole thing was very Ponzi-like, and at one point, the company's former finance chief said, "We are doing something possibly illegal and definitely not compliant." And what an office that must have been to work in. Finding yourself wandering over to Cheryl's desk like, "Hey girl, great top. Quick question. Are we like doing crimes?" Because I'm getting like major crime vibes in here. Also, have you seen our boss, Dab? It's very weird. And when Celsius inevitably collapsed, people got hurt, especially because in the fine print, the company's terms of use stated that customers transferred all rights of ownership in their crypto assets by depositing them in a Celsius account, meaning that when people tried to withdraw their money, they found out it legally wasn't theirs anymore. And while Celsius and 𝗫𝗫𝗫𝗃 have not been criminally charged, tens of thousands of customers still have digital assets trapped on the platform, and Celsius has reported that it owes them $4.7 billion. All of which is enough to make you think that while banks are not your friends, this guy may actually be your enemy. So
one of you asked for it, so you got it. Let's actually look. Someone's saying the market's actually moving in the last 15 minutes. I mean, yeah, that's a move for ants. That's a real move for ants. That's a tiny move. All right, guys, listen, I'm not going to see you tomorrow. I will see you the next day. Follow me on Twitter and join the trading competition. See you guys on Wednesday. Until then, trade well, my friends.